Hi, I'm Matt, Head of Passive Portfolios at AJ Bell. I'm here to run you through our Responsible Growth Fund. In many parts of our lives, we try and do the right thing. Switching from plastic bags to a bag for life, walking rather than driving, supporting social justice and progressive causes. The Responsible Growth Fund offers you the opportunity to make a difference through your investments too, without compromising on performance. We've done this by focusing on companies better positioned on environmental, social and governance issues, commonly referred to as ESG, whilst excluding industries that are problematic. Like all our AJ Bell funds, the Responsible Growth Fund is built on the ethos of simple, transparent, low-cost investing. And, like the rest of our range, it's made up largely of passive investments. Investing passively is a low-cost, hassle-free way to gain exposure to financial markets, and over the last 3 decades has grown rapidly. A passive fund, or tracker, buys shares and bonds proportional to their weighting in an index or sector. So, a FTSE 100 tracker, for example, would give you exposure to the 100 largest publicly listed companies on the UK stock market. We use predominantly passive exchange-traded funds, or ETFs, to keep costs low, whilst focusing our research on making sure we invest in a broad range of regions, sectors and asset classes. However, when it comes to investing responsibly, passive has a drawback. Because it invests in companies based purely on their size or inclusion in an index, some of your money necessarily goes into firms with poor ESG credentials. For example, BAT, the 5th largest company in the FTSE 100, generates revenue predominantly through tobacco sales. The Responsible Growth Fund looks to address this issue by investing only in ETFs that have additional rules and filters to avoid controversial industries such as tobacco or alcohol, and that favour companies with progressive policies on, for example, diversity or carbon emissions. The Responsible Growth Fund has an ongoing charge capped at 1% per year. This is higher than the 0.35% fee for our other funds targeting capital growth because, like all responsible funds, the management takes more work. Before selecting an ETF, we run extra research on all the underlying companies to ensure they meet our responsible standards. Costs to investors will come down as the fund grows in size. And, across all our funds, AJ Bell Investments take a fund management charge of just 0.15%. The fund is designed to offer a similar long-term return to our Adventurous Fund by investing in the same proportion of shares and bonds. However, in the short term, performance could differ because the portfolio may be tilted away from certain countries and industries. Over recent years, responsible ETFs have often outperformed standard ETFs because of these differences. Although historic performance is no indication of future performance, this has dispelled the myth that taking a responsible approach necessarily means accepting a lower return. So how can we be sure the investments in the funds are responsible? Well, where possible, we invest in ETFs tracking an MSCI SRI index. Here's a quick run-through of how this works. The starting point is to take a standard index, such as the MSCI World, which is weighted towards the largest companies in developed economies. The next step is to exclude any company generating revenue from certain business areas, such as gambling or tobacco sales. Once these industries are removed, companies are also excluded which fail to meet a minimum MSCI ESG score, or which have been involved in any controversies. If the company is deemed to have breached social norms as set out by the UN Global Compact, they are also removed at this stage. Finally, the remaining companies are ranked by their ESG score, and only the highest scoring companies are included. The end index holds around a quarter of the companies in the original index. This approach not only reduces your investments in areas that might not meet your values, but also helps to reduce your carbon footprint. If you invested £10,000 into this fund, Compared to investing in a fully passive basket of equities, such as the MSCI All Countries World Index, your carbon footprint would be reduced by around 40%. Or, to put it another way, by the equivalent of recycling 15 bags of rubbish each year rather than sending them to landfill. So, if you want to reduce your impact on the planet and are willing to accept the shorter-term uncertainty of share prices, the Responsible Growth Fund could be just right for you.